So however way you want to cut it, whether it's like the 10 companies gets cut down into 5, or the 10 companies that I invest in get half my money. The point is, at some point, the money starts to run out. Not just for me, but for everybody else.
Basically, at the end of the day, the money goes into the hands of, government legislators and administrators to decide how that money gets spent, and it's not in the hands of capitalist investors to decide where to invest.
And you have an enormous investment in a private equity fund or a hedge fund. Part of these things is that, they're these complete pass-through vehicles. And so as long as you've structured yourself in a way where you don't have to pay that tax, I guess you're indifferent. But if you're any organization or institution or a person or collection of people that bears that tax, all of a sudden, your returns have been basically cut in half. That's pretty nuts.
I started as a day trader effectively, meaning on the side, I would speculate in my, teens and in my 20s. An investor is not a speculator and it's not a day trader. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. And you have to learn how to invest, which is to put money into the things you care about and then do nothing.
Let's take a step back and actually see the forest from the trees. And the forest from the trees is that I don't think Biden thinks that it's a credible plan, in as much as I probably think he needs, this is it's performative, because it was a lot larger. The headline number was a lot larger than what people were whispering was going to be the number, right? It was supposed to be in the low 30s or maybe kind of 33, 34. And then all of a sudden, to come out at 39.6, I think it's almost okay, he's giving the pound of flesh to the left kind of woke mob of the Democratic Party, who probably doesn't understand how capitalism works in the first place and doesn't care because they're not participants in it. Now, my reaction is I don't think it's going to pass. I think it's going to be really tough to get done, and I think it probably maybe there's a watered down version, but this version I'm not super worried about. And then it just comes back to the same thing over and over. The fewer the number of people that get to participate in the growth and see the upside, the more there are that just wants to just kind of tear it all down. And so I don't know, it's just yet another signal that we have these structural issues to fix. It's not reasonable that a few people get super rich and everybody else gets left on the sideline. On a marginal basis, what will happen is inflation probably goes up because people just decide to consume rather than invest, because they think, well, what's the point? There's already risk that I bear. And so, the earliest risk assets, right? The riskiest ones that we all participate in, which is early stage venture and company formation. You may not be thinking about the capital gains rate, but it's implicit in the returns that you're expecting for the risk and the time you're going to take. And, we've been trained to feel that rate. And if you double that rate from 20 to 40, I suspect that there's a lot of people whose risk tolerance changes and they're going to feel their after-tax gains differently. And they'll wonder to themselves, is this worth it? And then I think what happens as a result is entrepreneurship drags. I don't know if anybody's done an analysis, but I suspect part of the reason why America is such an amazing sink for capital, right? It absorbs capital all around the world, is that you've created incentives that get people very excited because they think they can get rewarded. If you take those rewards away, I think the implications are much bigger than just the cap gains rates here, because as the people change their behavior, then the capital formation pools outside of the United States change their behavior, and the whole thing has a knock-on effect. And it was more muted in Clinton. It was less muted in 78. It basically didn't exist in the 40s and 50s, but it is a huge force today. I mean, we are an indebted nation that owes money to all kinds of countries around the world, including China. We're supposed to generate growth and sort of pay it back. I'm more sympathetic to governments being over-levered because governments effectively are, at this point still, that may not be the case in the future, the only form of too big to fail that I think we can tolerate. I have a much bigger issue with private market participants being over-levered, because I think that is a level of greed and risk that shouldn't exist.
Unnecessary.
in large part because the governments themselves are so levered on the way in. So maybe that's the way to think about it, which is if we have to isolate risk and we know we can't tell governments to stop spending, then I think we should probably make sure that risk is better managed at the individual level, people and companies.
Look, unlike other recessions where you don't know where the bottom was, this recession was actually pretty easy, where the bottom was the first few months because literally everything was shut down. So we went to zero. And so now we're in the slow grind back to normalcy. But the reality is the economy is not in a great place. We saw that first phase of stimulus, frankly, was, quite honestly, wasted. A lot of this money got sent to companies. Those companies didn't allocate it properly. They still ended up laying off tens, if not hundreds of thousands of employees, just literally the day after the stimulus said that they could. So the money wasn't functionally useful. I've really maintained that the right way to think about this is to increase the amount of stimulus that we send to direct Americans. I think that we know this economy is always consumer-led. It's consumption that drives growth in the United States. It drives jobs and capital allocation. And the more money in individuals' hands, the better they can be to support businesses, buy different products, and that's how we grow ourselves out. And the longer we wait to realize that, and the more money we waste and give to zombie companies, we're just gonna, push the can down the road, and it's all unnecessary.
By the way, think about what just happens to any organization that has to pay cap gains, right? It's not just individuals. Like last time I checked, organizations aren't exempt from cap gains, for-profit organizations. And I don't exactly know what they will do as well. So, you're putting a lot of people under a huge strain when you double the effective rate of return. So, if you're, for example, like a pension fund, right? And you have an enormous investment in a private equity fund or a hedge fund. Part of these things is that, they're these complete pass-through vehicles. And so as long as you've structured yourself in a way where you don't have to pay that tax, I guess you're indifferent. But if you're any organization or institution or a person or collection of people that bears that tax, all of a sudden, your returns have been basically cut in half. That's pretty nuts.
And where will the growth come from if LPs don't want to back venture funds or venture funds?
But let's
and
be
people say,
let's be honest
maybe I'll
and
check out.
Let's be honest and direct.
Yeah.
I mean, are any of you guys going to change your investment behavior if the cap gains tax goes to 40%?
No, but there'll be less of it,
Yeah.
So look, anything.
My behavior has changed.
I think my behavior will change. Yeah.
How will it change?
It's exactly what David said. So I just put in $100 million into a climate change company 2 weeks ago. Under this promise, I could only put in 50. So there's 50 million less progress that's going to happen in that business. I'm not sure that's the right answer for what that company is trying to do in the world.
And the way it will change.
You're saying the profits you would have had from before are diminished in half. Therefore, you would only have half as much money to invest as an investor.
So however way you want to cut it, whether it's like the 10 companies gets cut down into 5, or the 10 companies that I invest in get half my money. The point is, at some point, the money starts to run out. Not just for me, but for everybody else.
Basically, at the end of the day, the money goes into the hands of, government legislators and administrators to decide how that money gets spent, and it's not in the hands of capitalist investors to decide where to invest.
Is because they take it upon themselves to learn how to become an investor.
Because people just decide to consume rather than invest because they think, well, what's the point? Is a level of greed and risk that shouldn't exist. And you have an enormous investment in a private equity fund or a hedge fund.